Assalamualaikum warahmatullah and good morning. In this series of video lectures, we will be looking at the topic of completing the accounting cycle for service organizations, service-based organizations. We will look at the other types of businesses such as merchandising, manufacturing in other topics. Okay, so in this particular topic, we'll be looking at the service sector. All right. The learning objectives of this topic is firstly to prepare a worksheet, and secondly to prepare closing entries and a post-closing trial balance. Thirdly, to explain the steps in the accounting cycle and how to prepare correcting entries. And fourthly, identify the sections of a classified balance sheet. So in this first video, we will be looking at how to prepare a worksheet. What do you mean by worksheet? Okay, worksheet is a multi-column form used in preparing financial statements. Okay, and it is not a permanent accounting record. Okay, we use accountants use worksheet as a draft paper, or a place for the accountant to populate or to summarize the trial balances and to create draft financial reports in one sheet, so that he can see all the data, all of the accounting balances. Okay, the account balances. Okay, so it's not a permanent accounting record. Okay, the permanent accounting record will be in the journals, and then the ledgers or the accounts, and trial balance is a formal some sort of statement or report. But the worksheet is just a place for the accountant to make drafts. So accountants may use computerized worksheets, such as using programs like Excel or Google Sheet if they like to. And using worksheet uses 5 process or 5 steps, and it is optional. Okay. Accountants do not need to use worksheet. It's just an aid to help them in drafting the financial reports. Okay, so but we will learn how to use a worksheet because it helps us to understand an overall view of our accounts and how our accounts will be used in preparing our financial reports. Okay. Right. Okay. So this is some sort of template, or how a worksheet looks like. Okay. So the leftmost column will be showing the accounts. Okay. So we will show all the account titles. Okay. This is the leftmost column, and the second 2 columns will be the trial balance. It will show the amount that is entered into the trial balance, either on the debit side or the credit side, for all of the accounts. Okay, and then the third 2 columns will be the adjustments. So adjustments needed on the accounts will be entered into the this column. And then the fourth 2 columns will be the adjusted trial balance, which will reflect the trial balance after adjustments. And then the 5th column will be the income statement. Okay, when we have the balances from our adjusted trial balance, we will transfer it into our income statement to draft our income statement, and finally the balance sheet. Okay, so this is just a draft of it, but we will see the example after this. All right, so this will be an example with the figures. Okay, based on the template that we've seen before. So the first step is to prepare a trial balance on the worksheet. Okay, like I said, there are 6 main columns. There will be the accounting titles column, there will be the trial balance, there will be adjustments, adjusted trial balance, income statement, and balance sheet. Okay, so the first thing that we need to do is to prepare a trial balance on the worksheet. Okay, we have a column of trial balance. So firstly, we need to list all of our accounts in the accounts titles. Okay, so we listed all of the accounts. So here we have the cash, the supplies, the prepaid insurance until rent expenses. Okay, and then we will enter the balances of the accounts, the ending balance of the accounts into the trial balance column. Okay, so we will take the balances of those accounts, either the debit balance or the credit balance, and put into the respective debit or credit column of the trial balance. So for example, in the cash account, we have a debit balance of 15,200. Therefore, we insert in the debit side of the trial balance here in on the debit side. And then we put in supplies 2,500, prepaid insurance, and we also have some accounts with credit balances. So we will take all those balances and put into the credit column of the trial balance here. And then after doing it for all of the accounts, we will add a row at the bottom here for the totals, and then we will put the appropriate underlines. Okay, put the appropriate lines here, and it should balance. The total of the debit side of the trial balance should equal the total side of the credit. Okay, so it should equal. Okay, remember this is a working draft. So this is not the actual trial balance. This is a draft of the trial balance, and accountants need to produce the actual trial balance. But this worksheet will be a guide for them. Will be a blueprint, some sort of a blueprint of the trial balance. Okay, so this is the first step. Second step is the journal the adjusting entries. Okay, so this based on our previous topic, we already have looked into the examples of adjusting entries. Okay, we have adjusting entries for our supplies, we have adjusting entries for our prepaid insurance, for depreciation, on all of this. Okay, you just look back at the previous topic, okay, to recall about this one. Okay, but we already have prepared we have learned how to prepare adjusting entries. Okay, all right, so our second step is to enter the adjustments in the adjustment columns. Okay, so so if we refer back to the previous slide, the first adjustment is regarding the use of supplies. Okay, we have bought some supplies, and at the end of the month, I believe, some of the supplies have been used. Therefore, there are adjustments need to be done. So we enter the adjustments for the account. Okay, in this column, the adjustment column. So in terms of the supplies used, we need to credit 1,500 for the supplies. So we find the supplies row, the supplies account row. Okay, so this is the supplies account. So we credit the supplies account by 1,500. And then we need to debit the supplies expense. Okay, so from our original accounts does not include supplies expense. Therefore, we need to add a supplies expense account into the worksheet. So we add underneath the total of the trial balance. Okay, we add the supplies expense here, and then we enter the adjustment amount of 1,500 on the debit side. So similarly, we do for all of the adjustments, the insurance expired, the depreciation expense. So if those accounts that are involved in the adjustments are already in the list here, in the original list, then we just enter, we update in the adjustment column. Okay, but if the accounts that are needed for the adjustments are not listed in the original list, then we add the account underneath here. Okay, in this area. Okay, we need we put in the additional accounts, add additional accounts as needed. Okay, and then we enter the adjustment, either debit or the credit side of the adjustment. Okay, and this one, and until all of the adjustments are completed. So if you total up all the adjustments here, then it should show that the debit side and the credit side of the adjustments to be equal. 3,440 and 3,440 on the debit and the credit sides. Okay, so that's the second step. Okay, the third step. Okay, the third step is we total up the trial balance debit and credit amounts with the adjustments amounts to come up with the adjusted trial balance. Okay, so what we do is that for each row, for example, for cash, we look at the trial balance original amount is debit of 15,200. There are no adjustments, neither debit nor credit. Therefore, the adjusted trial balance will still be 15,200. For supplies, the original balance is a debit of 2,500. The adjustments needed is a credit of 1,500. Because supplies is so we net of the two. So there's a debit balance of 2,500, but there's a credit adjustment of 1,500. So intuitively, the balance, the difference is 1,000 on which side? On the debit side, because on the debit side is greater than the credit side. Therefore, there's a debit balance of 1,000. Okay, so there's a debit balance of 1,000 here. Prepaid insurance is started off with 600 on the debit side, but there's an adjustment of $50 on the credit side. Therefore, the net amount is 550 on the debit side. So similarly, we do for all of the rows, all of the accounts here, including the added accounts, the added accounts. So for example, supplies expense, we don't have an original amount, but we have the adjustment amount, the debit on 1,500 on the debit side of the adjustment, and therefore the adjusted trial balance should have a debit side as well of 1,500. So we do for all of the accounts. So after we did all of this for all of the accounts, we should total up the adjusted trial balance. Again, the debit side, the total on the debit side should equal the total on the credit side. Okay, so that's the third step. The fourth step is we need to extend the amount from the adjusted trial balance columns into our statements, into our income statement, as well as our balance sheet. Okay, so here we need to recognize which accounts, which account balances should go into the income statement and which should go to balance sheet. Okay, so if you recall the previous lectures, that all of the income accounts as well as the expense accounts should go into the income statement, because income statement we are looking at the benefit, the loss or the benefit that we have obtained through our activities. Okay, so to get that, we need to include all of our income and all of our expenses into their income statement. Okay, whereas the balance sheet will show the current standing of our asset, our liability, and our owner's equity. Okay, therefore all of the assets, all of the all of the liability accounts and all of the owners capital accounts will go into our balance sheet. Okay, so we go one by one. So for cash is an asset account. So from our adjusted trial balance, we transfer 15,200 into the debit side of the balance sheet. Remember, for this part, it's we transfer into the appropriate statements on the same side as the adjusted trial balance. Okay, we just carry on. So here from cash, we have a debit side of 15,200. So we because it's an asset, we enter it on the debit side of the balance sheet. So we go, the next one will be supplies. Supplies is a debit side in the adjusted trial balance. Then supplies is an asset, so therefore we put it into our balance sheet on the debit side as well. So we go one by one. Prepaid insurance is an asset, so we carry it into the balance sheet. Notes payable, equipment is an asset, we carry it into the balance sheet. Notes payable is a liability, so we carry it into the balance sheet on the credit side. Okay, so we do all of this. When we find owner's drawings, so owner's drawing will be related to account owner's equity. Okay, it's related to the owner's capital, therefore we put it in under the balance sheet. Okay, service revenue, so because it's an income account, it's a revenue account, so we put it into our income statement. Okay, salaries and wages expenses, it's an expense, we will insert it into the income statement. Okay, so each account will only go into one of the income statement or the balance sheet. It cannot go into both of them. Okay, so remember, the revenue accounts and the expense accounts should go into the income statement, whereas the asset, liability and owner's capital should go into the balance sheet. Okay, so we carry on doing this. When we have done all of this, we will find that the income statement, when we total up the income statement on the debit side, it has a certain figure, but the figure is not the same as the credit side. Okay, it's not the same. Okay, why is it not the same? The difference on the debit side versus the credit side is due to the difference in the revenue and the income. So, and it is expected to be like that. When your business performs your transactions, you are expecting that your revenue will be more than your income. Your expenses. So here, the revenue of the business totals up to 10,600, but the expenses is only 7,740, and that is expected. What does the difference mean? The difference means the income. That's the profit. That's the net income, or the net profit from the business. Okay. So similarly, in the balance sheet, it differs. Whereas we understand that the balance sheet shows asset equals liability plus owner's equity, whereas it should be equal. So why is there this discrepancy between the debit side and the credit side? The discrepancy is due to the same thing, which is the net income. So what we need to do is in the fifth step. Okay. The fifth step is total the columns, compute the net income or loss. Okay, so we have calculated the total of the debit and credit side of the income statement and the total debit and credit side of the balance sheet. So the difference, if the credit side on the income statement is more than the debit side, so that indicates net income. Okay, so logically, because the credit side refers to all of the revenues and the debit side refers to all the expenses, therefore, because revenue is higher than expenses, then we are expecting a net income or profit. So that profit, the difference we should enter here. We should enter the difference here, so that when we total up, it still become equal. Okay, on the credit side and the debit side, it becomes equal. The difference of 2,860 is due to net income. This is the net income, and this net income needs to be transferred to the balance sheet on the opposite side. Okay, so because on this side we have if you look at this the credit side is more than the debit side by 2,860. If you look on the balance sheet, you will find that the same different amount between the debit and credit side, but the difference is the opposite. Okay, what I mean is that here in the income statement, credit is more than the debit side by 2,860, but in the balance sheet it's the debit side that is more than the credit side by the same amount, 2,860. Therefore, to balance out everything, so the income that we obtain here, because of the difference between credit and debit, we enter this amount in order to for both of them to balance. The same amount we enter here. Now, when we enter 2,860 on the credit side of the balance sheet, we will find that the total of the debit and credit will be equal in the balance sheet. So that's how we do it. So in case the business is not making profit, instead is making a loss, you will find that the total on the debit side will be more. This one will be more than the credit side if there's expenses are more than the revenue, and you will need to enter the loss, the net loss on the credit side. And then when you transfer, you look into the balance sheet, you will also find that the imbalance showing that the credit side is more than the debit side. Therefore, you need to enter the same profit figure, or the loss figure in fact, on the debit side of the balance sheet. Okay, so once you do this, you will find that the total income statement is on the credit and debit side will be equal, and the total on the balance sheet on the debit and credit side will be equal as well. Okay, so that's the yes, it's that.